Hello and welcome back to the Mortgage Corner. I'm Isaiah Ossink, and today we'll be talking about the differences between FHA loan program and the conventional loan program. But before we do, please hit that like and subscribe button. It really does help me out. Now, let's jump in. One of the biggest differences to cover first is the fact that the FHA loan program is backed by the Federal Housing Administration, so it's government backed. The conventional loan programs are not backed by the government whatsoever, and they are provided by private lenders who will cover the loan costs. Another big difference is the fact that a FHA loan, its minimum down payment requirements is 3.5%, where a conventional loan program, its minimum is 5%. Unless you are a first-time home buyer, then you can go as low as 3%. And you may be wondering, well, I've already lived in a home, but it's been a while. Am I counted as a first-time home buyer again? The rule is, as long as you haven't owned your property that you've lived in for the past 3 years, you do count as a first-time home buyer once again. Even if you owned your home for 10 years, but then you moved out and you've been renting for the past 4, you're good to go. You're a first-time home buyer once again. So that's something to consider and remember. Something else to look at is the differences in credit score requirements. A conventional loan requires a minimum score of 620, where an FHA loan requires a minimum of 580. So there's a 40-point difference there. And on top of that, with an FHA, you can go even lower than that, but then they start to raise that minimum down payment requirement. And usually it increases your rate to some pretty unfavorable points. So it's usually not really recommended, and most lenders just say, hey, we kind of require 580. And some companies put overlays over saying they do require absolutely 580. So you do have to check with the lender on that, see if it's even an option for you. Some people allow it, some people don't, just because it's honestly not always even worth it. If you're in a rush and you kind of need a home and that's just the way it works, that's the way it is. But usually it's recommended to avoid going below that 580 mark, even just for the lender's security and sake on that side. Something else that a lot of people may not know is there are different property options between the two loan programs. A FHA loan will not allow you to use it on investment properties or on vacation properties, and their inspections are often a lot more specific and the things that they allow and won't allow. For instance, chipped paint is not allowed with an FHA inspection. You'd have to go in and get that fixed. And conventional would be like, well, it's chip paint, whatever. The buyer's buying that, it's up to them. But the government's allowed to be a bit more strict on that. And so you'd have to either have the seller or you'd have to send someone in at your own dime to get that fixed before you're allowed to proceed. So that's something to keep in mind. Conventional loan, you can do investment properties, vacation properties, all sorts of things. They're a lot more open to whatever. So that's something to keep in mind depending on what you're trying to buy and what the purpose of the property for yourself is. Keep that in mind. Another big one to consider is mortgage insurance. With a conventional loan, it's on your loan until you hit that 80% loan to value ratio. So it's essentially, if you put 20% down right off the gate, you're there. You don't have mortgage insurance put on there. And that's why a lot of people, especially used to say that you have to do 20% down. That is not the requirement anymore. And often it's not always even recommended depending on your situation. I mean, if you have a plethora of money, then yeah, go for it. But sometimes if you're close to it and you're like, oh, well, should I wait and save up? Or should I just buy now? It's good to ask your lender to weigh the options for you, weigh the costs of waiting. Because sometimes the mortgage insurance over the next 2-3 years would be less than the amount you would earn in equity in that home. So sometimes it's worth to just go ahead with it, pay that mortgage insurance for a couple of years, and then get it taken off once you hit that mark, and then you've actually saved money over the life of that time. With an FHA loan, oftentimes they require an upfront mortgage insurance premium, and it can be tied into the loan sometimes, or instead of that upfront, it can be tied in. And that one, you don't get removed. It will be in there for the life of the loan. There's always that mortgage insurance on there. Even it can last the entire life of the loan sometimes. So that's something to keep in mind. Yes, it helps you get in earlier upfront with like lower requirements, but there can be that extra little bit extra on your month to month. So it's something to keep in mind as far as that goes. So be sure to talk to your lender about mortgage insurance and what that looks like in your loan and your loan options. Well, those are the big differences between FHA and conventional. As you can see, there's some slight differences in there, but they can add up to a lot depending on your situation. These are probably the most common loan options out there. So just have your lender go through, have them look at both options for you if you're interested. Conventional, if your credit score's high, is usually the best route for you, but you never know based on your situation. It's always good to just look at all your options just to make sure you get the best pricing, best interest rate for your situation. So if you have any questions or comments on this video, please feel free to leave them in the section below. If you have any ideas for any future ones, let me know, and I'll see you guys in the next one.